Gallup, New Mexico. Thank you for joining me today. And if you think you can't afford a mortgage, by the time I'm done, I think you're going to be thinking that you can't afford not to have a mortgage. Guys, we often hear about home ownership, the financial stability and financial security that home ownership provides for the homeowner. And so today, Gallup, on this episode of Going Deep with Gallup Real Estate 101, I want to show you what some of those benefits are and exactly how much having a mortgage is going to save you over renting. So let's get started right here. And I'm going to take for this first part, which has to do with rent versus mortgage, let's just take an income of $3,000 a month. Statistics are telling us that the average renter is spending 27.7% of their monthly income on rent every month. And so if you're making about $3,000 a month, this means that your rent is, you're spending about $810 a month on your rent. Now guys, I understand, and first off, if you found a spot for $810 a month in Gallup, New Mexico, you're probably doing pretty good because most rents out there are $1,000, $1,200 a month. But keep in mind that 27% of your income is going towards rent as a renter. Now, when you're a homeowner, the statistics are telling us, because of low interest rates right now, only about 17.5% of your monthly income is going towards your mortgage. So this, by comparison, means your monthly mortgage is probably closer to about $510 a month, where your rental is paying about $810 a month. One of the things you need to understand, if you're a renter, you're still paying a mortgage, you're just not paying your own mortgage. That being said, I want to talk to you about some of the tax benefits, because again, today's subject is talking about think you can't afford a mortgage. I'm going to show you how you cannot afford not to have one. And so let's talk about the tax benefits and the mortgage interest deduction. You know, your mortgage interest deduction is one of the few tax deductions that you still get to take. And what it basically does is it reduces your adjusted gross income. So let's say, for example, I'm just going to use this hypothetical. Of course, I'm not an accountant, but if you were making the same $30,000 a year, you might be getting taxed at a 20% or so tax bracket, which means you're paying $6,000 a year into state and federal income taxes. Now, what you need to understand is your mortgage interest deduction, the interest you pay on your mortgage, comes off of your adjusted gross income. So if you're making $30,000 a year and paying $6,000 in taxes, let's say you pay $10,000 of mortgage interest in the year, now you're only going to be taxed at $20,000 instead of $24,000 when they take out your money. So my point being is that there's some significant tax benefits. And anybody any first-time home buyers who want to buy from Coldwell Banker High Desert Realty, guys, I'll send you to the tax professional at your closing to be sure that you're taking advantage of the mortgage interest deduction and cutting down your taxable expenses. Equity positions. Another thing that homeowners are benefiting from that renters are not is an equity position. A couple of weeks ago, I did a video on this channel right here that talked about how quickly an equity position rises over 5 years. And the families who bought a home for $150,000 5 years ago, today the home is worth about $174,000. And with the amount that they paid down on their mortgage, they were actually in an equity position of about $37,000. Now, when you're a renter, guess what? You don't get an equity position. You pay that month's rent, and that's all that you pay, and that's all that you get. And at the end of the month, the tenant or the landlord expects you to be out. Here, when you are a homeowner, you're building equity, and the biggest thing I want you guys to see out of this $37,000 here is $24,000. Over half of that, as a matter of fact, 2/3 of that came from property value growth and not from what you paid down on your mortgage. So again, just going through, think you can't afford a mortgage, well, you can't afford not to have one. You're seeing that rent is significantly higher than what mortgage payments are. You're seeing that tax benefits from your mortgage interest deduction are something that you need to be taking advantage of to help set your financial future up for your family. You see the equity positions that are happening. Now those are all financial benefits. But let me tell you about the benefits to the family that really make a difference when you're a homeowner. And the National Association of Realtors came out with a report, said the social benefits of home ownership. And this is what they really pointed out. Number one, kids of homeowners have a higher chance of completing high school than kids of renters. Can't see my writing down here. It's totally awful, but I got to go back to school. I can't even spell. Number two, kids of homeowners had a higher chance of going to college and completing college with a degree. So these were some of the benefits beyond financial for our homeowners. Number three, there was lower crime in neighborhoods with high home ownership rates as opposed to high rental rates. And the reason for that is homeowners have been in the neighborhood a lot longer. They know who the friends and families are and stuff, and they know when somebody's not supposed to be in a particular area. Number four, homeowners are more involved in social and local government, such as your school boards and stuff. Homeowners actually want to see who's on the school board and try to make things better for their schools. So the reason I'm just sharing this with you guys, again, think you can't afford to have a mortgage. I'm telling you, you can't afford not to have a mortgage. Look at the benefits here. I mean, this is $3,600 a year back into your family's pocket. This right here can be another $10,000 a year into your family's pocket. This over a 5-year period is almost $7,000, $8,000 a year in your family's pocket. The benefits to our family, to our kids staying in school, getting educated, and moving on to advanced degrees and stuff like that is significant. So what I want to let you guys know is there's two big myths that are going on that are preventing renters from becoming homeowners. Myth number one is that you need a 750 credit score to be able to get into a home. Guys, it's not true. 53% of all the home loans that have been written recently have been for credit scores between 580 and 750. So understand, over half of the home loans that have been written recently are between credit scores between 750 and all the way down to 580. So you don't need a 780 credit score. The other thing that you want to be aware of is you don't need 20% down. Another big myth is that you need to be putting big down payments down in order to take advantage of home ownership. Guys, it's not true. I'm going to talk to you about low down and zero down home loan programs. Let me explain. We use a lot of USDA programs, and USDA programs actually can finance up to 103% of what the loan amount is, or what the purchase price is. So if you're buying a house for, let's just for simplicity say $100,000, USDA loan amounts can go up to 103% or $103,000 to help you get into your house with very little money out of your pocket. You're talking about paying for inspections and earnest money. USDA loans will cover a lot of that for you. We have a lot of veterans out there. If you've served in the military, honorably discharged for at least 2 years, you qualify for a VA loan. VA loan is easily 100% financeable loan, and you don't have private mortgage insurance as a veteran. Great low down loan program. We have HUD 184, which is something that's kind of unique. If you have Native American descent, you can qualify for a HUD 184. This is going to be a 2.25% loan amount, so you can actually get into or 2.25% down. I'm sorry. So if you're on a $100,000 house, you're only talking about $2,300 to be able to get into. And we also have FHA loans. And with FHA, using Mortgage Finance Authority from New Mexico, this can be a true zero down loan program for you. So guys, what I want to let you know is home ownership. Yes, we talk about the financial benefits. You're seeing about some of the benefits of your family down here. Guys, if you don't think you can afford a mortgage, come in, talk to us, sit down. Let's see what we can come up with you, because I don't think you can afford not to have a mortgage in today's market. Anyway, this is Jason with Coldwell Banker High Desert Realty. Guys, I'm hoping you'll give me some comments down below. Share this with friends or family, folks who are thinking about making that home buying decision. Maybe they're on the fence. Maybe they're one of these folks who don't think they can afford it. Share it with them. Let's get it out to them. Let's help your family members and your friends as well. Guys, again, this is Jason with Coldwell Banker High Desert Realty. Comment below. Let me know what you think. Thank you so much. Bye-bye.